we are in what I believe is a relief rally. I don't believe that the bull market has really kicked in yet, contrary to what a lot of people might say. And I'll show you some things. Matter of fact, maybe I should probably just show you those things. But I do believe that we are in a bull market, but in a bear market with a relief rally taking place is what we're thinking about. And I'll show you some things about that. A couple of things I'll just do real quick before I move forward. When I talk about catching big trends after a Fed announcement, this is kind of like what I'm talking about. So if this is kind of stuff that you would say, hey, I want to find situations like this where we can catch it and make some pretty decent moves off of big trends like this. That's what we're going to talk about. And the candlesticks I'm going to be sharing with you guys today is called the right side candle. Some of you guys know what that is. If you don't, that's what we're going to talk about. And before I talk about this bear market, bull market thing, one last thing I'll show you here is that I am having a workshop tomorrow evening at 8 p.m. For those who might be interested and want to join us, just go to this link right here to sign up, rightsidetrading.com/candlesticks. This is where I'm going to talk about the different candlesticks you want to be paying attention to in this post, Fed rate increase, so that way, not only would you be able to catch the trends before they begin, but also if the trend ends up becoming, a trouble and starts heading down, you know what to pay attention to. Okay, so tomorrow evening, 8 p.m. Eastern time is going to be recorded for those who register. Just come on here and you'll be able to do that. Okay, so let me do this. Let me address this whole notion of are we in a bull market or bear market, and why I believe that we are in a bear market with just a relief rally. I won't go too much into details, but I'll show you some things that you should be paying attention to, because I always say data is what I like to follow. So here's the S&P 500, right? And I'm going to take you to the monthly chart. Matter of fact, what I want to do is take you back in time. And what we're going to do here is just kind of look at some past bear markets and see the if I call it the structure or the pattern, let's call it more the pattern of a bear market that we need to be aware of, which some people might not be paying attention to these things. So just look at this. So we're going to start with the bear market of 2008, and I've already highlighted a section in there that I want you guys to pay attention to, and that is when the bear market started in 2008, just like we have right now. A lot of people at first were in denial that we were heading for a bear market. And then eventually it got to a point, it's like, hey, maybe we've hit bottom. Where is the bottom? Where is the bottom? And what you'll see here is that after about 4 to 5 months of the market going down, we hit some type of a bottom down here. And what happened after that was that for the next 2-3 months, market rallied for about 2 to 3 months. And so this is why, even to my subscribers, I told them this back in the end of June. I said, hey, we have reached a section of this bear market whereby we can expect a relief rally to happen starting in July. I said July, maybe August and September, we might see a relief rally that will last about 3 months long. And I said, anybody who tells you, like the biggest challenge we will face is whether we believe it or not, because 3 months of the market rallying will make it seem like, what are you talking about? There's no bear market. There's nothing but good news everywhere. Everything is fine. And I just want to draw your attention to what's happened in the past. Okay, and I'm strictly just basing this off the past. I'm not even basing this off of any other information, but just look, in bear markets, here is the pattern that you would typically see. Okay, so if this pattern repeats itself, then here's why I'm saying we're still in a relief rally. Does that make sense? One of the analogies I like to use is in Florida. For those who live in Florida, I think most of you guys live in Florida, we have hurricanes. And so whenever the hurricane season starts and we have a hurricane coming, one of the things we all know is something called the eye of the storm or eye of the hurricane, right? And that simply is you hear all the winds blowing, rain is dropping and everything like that. But then it comes to a point where everything stays calm, so calm that you can literally go outside and it would seem like as if nothing is happening whatsoever, right? And I don't know if anybody's ever walked out into the eye of the storm. I have, or the eye of a hurricane. I have twice actually, and it's like really interesting feeling and experience just to be out there, knowing that hey, it's not over yet, because we know what the the media people were telling us. But at the same time, at that moment, everything seems to be fine. Literally seems to be fine. Now you'll see the breeze on the road, all that kind of stuff, but at that moment, you can go outside. There's no wind, there's no rain, nothing is happening. And then, not too long after that, you start feeling the wind picking up again, and then the whole process starts all over again until it blows over, right? So I look at this as that eye in the storm or that eye in the hurricane, where market goes down, it has a relief rally, and then it tanks again. And that relief rally in a bona fide bear market can take up to 2 to 5 months. Okay, it can take up to 2 to 5 months. Here's what we see here in 2008. Now, the bear market prior to that was the dot-com bear market, and you can see the same thing happening here. Matter of fact, that happened a couple of times, but I highlighted this one because again, market went down. Then what did it do? It went up, 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 up for about 2 or 3 months, making it seem like everything was fine. Then it came crumbling down. It went sideways for about almost 7 to 8 months. Then it went down even further. So this is a pattern that occurs in bear markets, so that when we have those up months, the first month, second month, third month, and you're thinking, oh, it's all over, you might want to be careful, is what I'm trying to point out here. The one I'm going to take you back to again is 1981. Now, I knew nothing about the stock market in 1981, quite frankly. I was like a 5-year-old kid at that time because I was born in 76. 1981 was 5 years later. So I was 5 years old when this was happening. So I didn't know that there was a bear market during that period of time. I'm not sure if this was during that whole hyperinflation time or not, but whatever happened from 1980, October of 1980 to about, I would say, July of 1982, we were in a bear market. And the same thing occurred where somewhere along the way, again, this actually happened twice, but I'm not even going to count this because this was right at the beginning. But halfway through it, what you see again is the market seemed like it's put on the bottom. It rallied 1 month, 2 months, 3 months, and then it seemed like everything was fine, only for it to do what? Come crumbling down again. Let's take you back in time to the 1973. Again, not quite sure what happened in 1973. My guess is that this was during the oil embargo. I could be absolutely wrong. I don't know, to be exact. All I do know, because again, I don't care about the news per se, all I want to see is data. All I know is, again, this is a bona fide bear market. What ended up happening, market dropped for a few, went sideways. Now, in that period of time when it went sideways, we saw right here where it seemed like, hey, market started pulling back up. We had another month that was bullish, kind of like how we had this month of July. Then we even had market even go higher the next month, right? And interesting enough, this was in July through September when all this happened, right? And it seemed like everything was fine again until it wasn't, right? And then things went down again. So this is a part of a bona fide bear market, is that we will see relief rallies taking place. 1969, again, not sure what the story was there, but whatever the story was, the same pattern existed. Now, I am willing to bet that the story in 1969 was different from the story in 1972, or was it 73? I think it was 72. Was a different story, right? 1973, sorry. It was a different story, same pattern, right? That was different from 1982 or 1981. Different story, because this one started in October of 1980 all the way to about July of 1982. Okay, so different story is what I'm assuming, right? Same pattern. Same thing during the dot-com era. Different story, same pattern. 2008 financial crisis. Different story, same pattern. And this is why I focus on patterns as opposed to the stories. Okay. And that's just me. I could be wrong, but I've seen this happen too often. So now we go to 1969, different story, same pattern. What is this pattern? That we start dropping in the bear market. We get to a point where we have a relief rally that lasts about 2 to 5 months before it comes back down again. Let me take you back to the ultimate bear markets of all that everybody is aware of, and that was the Great Depression of 1929. Different story, same pattern. And we can see this occur multiple times during the process. This time, this is the 5, and this is where I came up with the 2 to 5 months. Okay, all these is on the monthly chart. So here's where I came up with the 2 to 5 months of a relief rally, because the same thing happens over and over and over. Okay, this happened for 5 months. Now imagine, let's just transpose what happened in 1929 to today. Okay, if that was today and this was the month of July, let's say this red candle here was the month of July. Let me do something here. Let me remove this drawing. If this was the month of July here, just like we are today, okay, right here, market has bounced tremendously. That's July. So this is August. This is September. This is November. I'm sorry, August, September, October, November. This is December, and up until even the beginning parts of January. Can you imagine market rallying this month? Well, now if market has rallied in July, market rallies in August, market rallies in September, market rallies in October, market rallies in November, market rallies in December, making higher highs, higher lows, all the way up until January. And we're still, and at this point, anybody would tell you, oh, we're not in a bear market. Okay. So the danger is people are not seeing the big picture. And so a relief rally could literally go from now to the end of this year, seriously speaking. And that's something that we need to be aware of. Okay. The question is, how do you know it is no longer a relief rally and it is now a true bear market? Now, we teach that in our 6-week coaching course, which we have going actually starting this Saturday. Anybody who's interested, let us know. We'll get you into that. But there's a way to tell. And right now, all I'm saying is that has not happened. It hasn't. It hasn't happened. So all I can do is be aware that, look, when things look like everything is fine, and I'm saying, no, we're in the eye of the storm. People are like, no, 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 the storm is over. I'm telling you, I went outside, everything is fine. That's what the eye of a storm looks like. Does that make sense? And so that's why I'm saying, like Dave, we're still bearish. We're just going through a relief rally. The question would be, how long would this relief rally last? Now, there are certain things that we need to see that kind of tells us if it passes this level, I know that the relief rally is no longer a relief rally. This is going to turn into a bull market, but we have to wait to see that to occur. But this is the reason why I say, hey, relief rally, take it for what it is. Right now, it's just a relief rally. When the market turns bullish and we have overcome that level where it's no longer a relief rally, we will see that, and it won't be too late. We'll see that we'll have plenty of time to turn bullish and make this thing start heading higher. Okay, so that's what I'm looking at. But in the meantime, while we are dealing with this relief rally, well, how do we take advantage of that? And that's what my presentation was supposed to be about today, or is about today. How do we still take advantage of this relief rally? Now, before I go into that, let me just go again. Hopefully you guys see this now. So now let's see, where are we today in the market? And here's where we are today. Market has dropped down for about 4 or 5 months, actually 6 months now. And this is the reason why in June, end of June, I was telling my subscribers, I said, look, expect July, August, September to act as a relief rally. Pure and simple. But what does that mean? So we can either sit on the sideline to the end of July, August, September, or we can say, look, let's play along and capture some of these rallies in the meantime. And so what do we want to be looking for when these rallies occur between now and the next downturn begins? That's what this candlestick signal is all about. Okay, the right side candle. Some real quick things about the right side candle. Again, rightsidetraining.com/candlesticks for those who want to join us tomorrow. A real quick thing about this, I don't look at volume. I don't need volume because it's just a signal. That's all it is. It's just a signal. So I don't need volume for this. Whether you want to pay attention to the news or not, that's fine. That's okay. There's nothing wrong with it. It's the way I look at it now. I don't. So I don't really need the news. But if you like the news, that's fine. So if you see a news event happen and you see either when the news came out or right before the news came out, you see some type of of this type of candlestick signal here. That's something to pay attention to. And then we're talking about, you can find this on the daily, weekly, or monthly time frame. The biggest thing I like to say is the higher the time frame, the more severe it is. Now, let me go back here just to give you an example of how you can identify it. It is two candlesticks side by side, a green and a red. If you use different colors, like say black and white, whatever your bullish candle is should be on the right hand side. We don't care about the wicks whatsoever. It's just the body. Pay attention to the body and the body alone. Our biggest thing is we want the top of that body, regardless of the wick, we want the top of the body to be above the one on the right. We want it to be above the top of the body on the left. And then the bottom of that body, we also want it to be above the bottom of the candle on the left. That's simply it. And again, now the other thing, it has to be opposing colors. So you don't want it being the same color. It has to be opposing colors. So basically, the bullish candle, the top of the body of that bullish candle, which is the close, needs to be above the open of the red candle. And the open of that bullish candle needs to be above the close of the red candle. That's kind of like what we talked about here. So if you can understand that and you can see that, then that's simply all you really need to know. And again, we don't need candlesticks. We don't need volume. We don't need any of that kind of stuff at all. Okay. And so what am I doing here? Sorry. Okay. So again, we don't need any of this stuff. We don't need news. I don't need news, but if news is there, that just enhances it. You can do this on any time frame. Now, some people have asked me, can you do it on even smaller time frames? The answer is yes. Unfortunately, I don't study anything less than a daily chart, so I can't tell you how successful it is or how unsuccessful it is. All I can tell you is that daily, weekly, monthly, I do know that it works very, very well. And one of the biggest things is the higher the time frame, the better it is. Okay. So now let's take a look at some charts and see how this works. So I take it back to, this is back in 2016 when the market was dropping pretty bad because of a lot of stuff that was going on in China and Russia. This is when in 2015, if you guys recall, a lot of people were talking about how China was going to take over. They were going to switch over to Chinese currency, blah, 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 blah. You know, they're trying to make Chinese currency the world currency. All kinds of stuff was going on. It was big news back then. I don't know if you guys remember that. Long story short, market started dropping early 2016, January 2016, dropped really bad. Everybody thought, okay, this is the end of it. We head into a bear market. And sure enough, all of a sudden in February, some of you guys might actually recall this. This is when we were actually having we were having a live meetup meeting in St. Petersburg. And there was a guy by the name of Dale Whitley who attended that day, and he came out and he was like, man, he was very loud, and it's like, this market is bottomed out, it's going higher, blah, 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 blah. And I was like, whoa, who is this guy? And well, what's this deal? And he was just so passionate about it. It's like, yes, I'm telling you, it's guaranteed. He's like 100%. I was like, whoa, even I never guarantee 100%. This guy comes out, no, 100% market is going higher, da, 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 da. Now, he had different ways of how he saw that and what made him say that based on his trading strategy. But you know, on one hand, I was looking, I say, yeah, I believe that the market is going to go higher, 100%. I mean, I'm not the kind of guy that is bold enough to say 100%. I could tell you 90%, 95%, yes, but 100%, I said, look, I always leave room for error because at the end of the day, we still need confirmation and all that stuff. But one of the reasons why I agreed with him was because of this right here, which is that right side candle. You can see that right there. The close of the green candle is above the close of the top of the red, and the bottom of this green was above the bottom of the red. Again, we don't care about the wicks. That is the pattern that we saw. Okay. Next thing happened was that boom, especially when you can then get a confirmation the next day. Confirmation means you want to see a close that is even higher within the next 5 days. So within 5 days, after we see this pattern here, especially if the market has dropped big, you get one of these, and then you get another candle that closes above within 5 days. Chances are very high now that this stock is going to have a good, decent trend. Now, even though, as I say, good, different trend, doesn't mean that it's not going to be volatile and choppy along the way. So people get mistaken about that, thinking it's only going to be green candles straight up like this. No, you're going to have choppy candles along the way. But the thing is, it's letting you know that this is something that is going to go higher. Here's another example of the same thing taking place. This was in 2016 as well, when the was it the Brexit situation happened. Prior to Brexit coming out, I saw this right here. This was the same pattern here, and I said, okay, great. Market is ready to go higher. I said, this is awesome. Market is ready to go higher. Matter of fact, at that point, I said, look, whatever the result is, this is telling me that they are going to take the market higher. No questions about it, right? Now, when that happened, this was like about 3, 4 days before the Brexit announcement. I was expecting things to go really, really high. So I bought, we had this right here. This was the confirmation candle right here. Boom. It's time to start buying. Started buying everything. Brexit was coming out. I said, I'm not selling. I'm holding on to my shares because of this pattern. The result comes out, and I'll never forget because I was staying up late that night. They came out with the final results. The results came out saying that they wanted to exit the European nation. Next thing you know, the whole market just started dropping. Now, a couple of days prior to that, they had people like George Soros on there saying that he was betting against the S&P, that it was going to crash and all this kind of stuff. I mean, it was really, really terrifying news out there. And I just kept on holding on to the fact that, wait a second, I saw a right side candle. News comes out, boom, market drops. I said, no way, it's going to be better by the time the market opens the next day. Nope. Market open, dropped, as you can see right here. Massive drop. Now I'm in the red, completely losing money on this thing. So I said, okay, let me give it about a couple more days and see what happens. The next day, boom, market drops even more. I mean, you should have seen the news at that point in time. Oh my goodness. And so at this point, I won't even lie. Even I was thinking, I said, oh my goodness, I think I made a mistake. I should have sold. But by now I'm taking massive losses. And I was like, man, so I had to decide. So I told myself, look, I'll wait one more day. If the market goes down even more, I'm getting out. Fortunately for me, I saw this the next day. And I was like, wait a minute. What are we looking at here? You guys recall what signal this is? The same candlestick signal. I was like, what? And so at this point, people were still talking about how bad the market was going to become. And I'm seeing this right second. I said, okay. So now I didn't do anything. Fortunately, I had not sold my position, but I said, let's watch and see. I said, however, if this market should confirm that by going and giving us another green candle the day after that, I'm like, look, we good. Market is going to recover, right? And that is in the face of all the negative news that was coming out at that time. And ladies and gentlemen, this is what happened. The very next day, this happens right here, which is the confirmation of this right side candle here. Boom. When I saw that, I was like, yep, the trend has begun. And we had a very nice trend for the next 3 weeks after that. Wonderful moves taking place. Here's another example of something like that taking place right here, where markets went down. Had this situation happen right here. This is the right side candle. Once that happened, you see that market started rallying. We had the same thing take place right here. This was a right side candle. But notice what we did not have the next day. We didn't have the confirmation. But remember, we said we want to wait up until what? 5 days to get that confirmation. So day one, no confirmation. Day two, no confirmation. Day three, no confirmation. Day four, no confirmation. And then look at what happens right here. Day five, we get this confirmation. What does that tell me? Market is going to have a powerful trend. You guys seeing this? This is what we look for. Okay. This is what we look for. This is what we strive for. Once these things happen, chances are very, very high that markets would rally. Okay. I'll show you this example here on the S&P 500. I want to show you this on the weekly chart. This is what we have. Okay. I want you to notice this. Look at this right here. Okay. That is the weekly chart, ladies and gentlemen. Weekly chart. Week one, no confirmation. Week two, no confirmation. Week three, no confirmation. Week four, check. We get a confirmation. Am I surprised that this is happening? Absolutely not. This happening when I know that we're supposed to be getting a relief rally that could last up to 3 months is no surprise to me, which is why I love understanding candlesticks. Now, notice this right here. We had the same right side candle here. When that occurred, I said, okay, great. Chances are market is going to rally higher. But what do we need? We need confirmation of that. What happened? Week next week, week 1, no confirmation. Week 2, no confirmation. Week 3, no confirmation. Week 4, no confirmation. Week 5, no confirmation. So anybody buying just because the market had a really good, positive, solid week would have been caught with the pants down. Okay. So this is why we wait for those confirmation. And I always tell people it's better to wait for confirmation than jumping the gun. So then we see this here, no confirmation, no confirmation, no confirmation, and then we get confirmation. I am not surprised that this is beginning to do what it's doing. But again, I know based on the pattern of bear markets that things always, the pattern of a true bear market, which is what we in right now, the pattern of a bear market is that it would drop for a few months, then it would have a 2 to 5 month relief rally. Okay, so I'm aware of that. I am completely aware of that. The thing is, how do we take advantage of it while those relief rallies taking place, and then be prepared for when the next drop begins? Okay, and that's what we're going to be talking about tomorrow. So I hope that this kind of sheds some light. If you can attend it, come join us. If not, totally understand. All right. But that is my presentation today. And I just wanted to share that with you guys. For those of you guys who decide to take advantage of this, these are some feedbacks we got from people that told us about these things. One of the things that you're going to get is not only the workshop, we'll talk about bullish setups as well as bearish setups, because I want you to know, hey, what are some of these bearish setups that you need to be paying attention to so that when this relief rally is over, because we don't know if it's going to last 2 months, we don't know if it's going to last 3. My estimation is 3, just simply based on past patterns in the past bear markets since 1929. But what if it turns out to be 4 or 5? I'm not sure. Okay. I want to be able to be prepared. And what are the bearish setups you will see when this relief rally is beginning to wear out and is ready to roll over? We'll talk about that tomorrow. Okay. Some of the mistakes that people make, you've already kind of started seeing some of these things right now, thinking that candlesticks can't give you heads up or not being aware of the bigger picture. So we'll share some more mistakes that people make when it comes to candlesticks that hopefully you can avoid. Okay. And then also some of the ways you can tell when something has gone wrong with candlesticks. Okay. I'm also going to share with you how you can identify fake signals, because they do occur. They absolutely occur. And so I created my own rules on how you can tell when a fake signal has occurred or is occurring, how to make sure you time your exit, knowing when you need to get out of it. How do you trade with stops, or should you not trade with stops, so that way you can let the trade grow. We'll cover all that stuff, as well as how do you find these type of setups easily. Okay. Typically we charge $197 for you guys, $67, but it's tomorrow, so it ends tomorrow. So please take advantage of that. Okay. We'll also throw in a VIX volatility video. If you already have that, then no worries. But if you don't have that, the VIX volatility video is something that you must have, and we'll give you that for free, simply because this allows us to see when volatility in the market, not in individual stocks, like Dave was mentioning. Dave was showing you the implied volatility in individual stocks. But I can show you how you can see the volatility in the market when it's topping out and ready to come down, which is so key, because once you start seeing that, you know that the market is getting ready to rally. But at the same time, you also need to know when volatility is beginning to gear up for a spike. Like literally, there are things that you can see that would tell you volatility is beginning to bubble up. Okay, once that bubble up starts, and then boom, you start seeing it. If you're like, oh, it's a shock, nobody saw this market drop out of nowhere. If you paid attention to volatility the way that we teach here in this course, which I will give to you at no cost, you will start seeing, if you pay attention to, I have one lady tell me, it's like every day I watch volatility now because I need to know what's going on. Once you see that and you start, hey, wait a second, things are bubbling. It's almost kind of like you see a cloudy day outside with a lot of wind. It's like, hey, wait a second, it seems like it's going to rain, right? That's kind of like how you can see volatility getting ready to spike. And this is why anybody who's ever heard me, you hear me say the market is not random. The stock market is not random. Is because we can see certain things happen. So you see how to tell when volatility is over in the market and when it's ready to go higher. So for $67, I hope that you guys take advantage of that. Just understanding what candlesticks to pay attention to, understanding how to see certain trends in the market before it happens. Okay. So I'm going to end it there, unless Dave has anything else that he wants to share. Other than that, if you guys have questions, let us know. Anybody who's interested in getting in touch with us, info@rightside.trading.com. Like I mentioned earlier too, we do have a 6-week in detail coaching sessions that we do starting this Saturdays, every Saturday, 10 o'clock. If you're interested in that, let us know. All right. Other than that, I guess we'll see you in September. Yeah.
Oh, let me just say something about the VIX
Sure.
there. It's I'm glad you're starting to follow the VIX here. That's option traders. Implied volatility is the third thing that determines the value of all options, whether you're getting into them or how the trade works out. So I've been preaching implied volatility forever. Pretty much, if you're going to trade options, you need to know that. So maybe it will turn you into an option trader over time here. We'll see.
It's going to take more than that, Dave. Hey, I'm going to just be honest with you. But,
Yeah.
I do agree with you. I do agree that implied volatility is something that people need to definitely.
By the way, there is the VIX is the implied volatility for the S&P 500 index. That's exactly what it is. But there's
Correct.
like a VIX, like a NASDAQ, and there's a VIX implied volatility study for every single symbol out there too. So
Correct.
yeah, pay attention to implied volatility. Absolutely.
I agree. I totally agree. If I was to trade options again, without a question, implied volatility would be something that I would definitely want to watch, because obviously it's very clear, and that's what I like about it. It's very clear. You can see it, and you can say, hey, this is where. Now, the only reason why I like the implied volatility on the S&P 500, which is the VIX, is because you can actually study the candlesticks, right? Whereas like the implied volatility on Apple, I'm not so sure if they have a candlestick implied volatility chart for Apple, right? I'm not so sure if they have. I don't think they have. I could be wrong, but I don't think they have it for individual stocks. But for the S&P 500, they do have it, and that's why I like that, because I study candlesticks. That's my forte. So I can look at the candlesticks, I can see what's happening. I say, yep, this is about to happen based on this candlestick. Yep, that's about to happen based on that candlestick, and it kind of gives me a better understanding of what's going to happen to the overall market, as opposed to individual stocks where I'm not sure if I could be wrong, but I just haven't seen the candlestick chart of the implied volatility for individual stocks. So it makes it harder for me to be able to read that.
Yeah, they show it as a study or a signal. So it's, if you will, it's a smoothed out candlesticks, if you will. It's just not a histogram, but it's available on Thinkorswim, on Tasty Trade, on Tradier, Delphian. It's a pretty standard study on most platforms. You just have to add it to the bottom of your chart, your price chart. I'll show it on any trade that I put on. It's on. If you watched any of the trades that I did today, the panel at the bottom was the implied volatility study for that thing, whether it was Texas Instruments in this case or
Correct. And I saw that too, but it's a line chart. What I'm saying is candlesticks, like actually having a candlestick.
For a right side candlestick that is that.
Exactly.
I don't know. You might be able to get a histogram. I'll look into that for you. See if I can find something.
Yeah. Histogram is not the same thing as candlesticks. We need to be aware of that. Okay. Because we don't want just a histogram. We want true bona fide candlestick, open, high, low, and close. If I can get that, then that would be a game changer for me, because I only operate based on what candlesticks tells me. And if I could get that, that would be definitely a game changer. Maybe then I'll be interested in trading options again, because I can see things using candlesticks before they actually happen, and not just even before they happen, but also when things starts going wrong. Like, to me, that's important. So sometimes, again, this is why I said we can talk about how to see fake signals and all that stuff, but also it's When you're in a trade and something starts going wrong within a day or two, within 1 or 2 candles, when you say, hey, wait a second, that's not supposed to be happening, and this is happening when it's not supposed to be happening, we need to go in there and start protecting ourselves because something is wrong. That to me is valuable information that a line chart cannot give me, a bar chart can give me, and that's why I can't help but just stick with candlestick because I read so much more data off of that. So
Yeah, that's the view that the lens that you're looking through. I get that, really, I get that. But you mentioned bubbling up VIX. Well, to watch out for when the market's going to turn, you'll look for VIX to drop. Like
correct,
today, it's about 22. It has not been below 20 much since the pandemic started.
correct,
So when it gets down near 20-ish, that's the time to start look out below that we could have maybe a pullback.
correct.
So
Yeah,
that's look for it to be the percentage on the line studies or on the panel studies that are on my chart. You look for it to be in the bottom percentile or the IV percentile to be from like 1 to 10, less than 10%. That's like the low. That's like it's like the buildup of volatility is getting ready to maybe spring and happen on you. And when the volatility springs, that's when you see the market take a dip or a dive or
correct.
trend. So
Yeah, yeah. No, you're absolutely correct.
different ways to look at the same thing. Yeah.
You're absolutely correct, and I think that's the beauty of understanding how implied volatility affects the market too as well. So yes, I look at 5 major indices. To me, the reason why I tell people I said like I don't pay attention to news is because I follow 5 major indices and the VIX, and through those 5 major indices, which is the S&P 500, the Nasdaq, the Russell 2000, the Dow Transportation, um, and the Dow Jones Industrial. With those 5 indices, I can see what's happening to them on a daily chart, weekly chart, monthly chart to get an idea. And then I look at the VIX. Once I study that and I can see certain patterns happen with on all of them, I have a very good sense of where the market is going. And it doesn't matter what is going on. It's like if these things are lining up, then it's bullish, or if these things are lining up, then it's bearish. And no matter what the news is, the news might disrupt it for like a day or two, but then you'll see it get right back on course again because everything is lining up. And so that's why I pay attention to those things. But yeah, implied volatility is super, super important. All right, guys. Well, thank you so much for being on the call. God willing, we'll see each other again in September. Enjoy the going back to school for those of you guys who have kids going back to school and or grandchildren. And we'll see you guys in September. Thank you. Oh, thanks, Joanne. I didn't know you were on the call. Well, thank you for being here. All right, goodbye, guys.